Yes, good to see everybody. I hope you guys had a great long weekend / holiday. I know I did, and looking forward to chatting things up today. Um, we're talking a stock that we've looked at in the past, but we thought it was worth taking a look at it. This week's highlight show ticker is IBM. I am joined by one Queen of the Candles, Leisha J. Leslie, and the Viking of volatility, Andrew T. Giovinazzi. I am Mark Sebastian. I am your only option. Let's dig in to IBM. Well, we've looked at this one, and it had a nice run since we visited last, but it's kind of petered out. When you look at IBM, the stock chart. I mean, it's not bad, but it's just it looks really strong, and then it's just kind of petered out in between 190 and 200 for the last few weeks. Now, the same kind of things that were driving this stock up still exist. It's just for some reason they don't seem to love the AI stocks right now. They're in a bit of a breather. We've seen IBM see some serious PE expansion over the last month or couple of months, really, since their earnings. Company still is really fundamentally sound. They seem like they're absolutely starting to get the AI piece and how it can help their business. And, I think they're heading on the right direction. I think this looks like a with AI stocks having PEs into the 30s, you'd be looking at 20% upside here, I think, at a minimum. If the conditions of Q1 continue to exist in Q2. So if Q1 plays out like Q2, IBM is probably going to have some excitement around earnings, and we're going to see it rally. Earnings are about a month away, the 24th. And again, I think you have to ask yourself, why, is this going to be something that's able to rotate it into when some of the other names are sold, or is this just getting a lift because of AI and it's still crappy old IBM? My feeling is it's still a little bit crappy old IBM, but they do seem to have finally figured out the AI piece. And like I said, if the trend continues, the upside here is probably 230, 240, 20%. That'd be what I'd be looking at. And you can see earnings. They're starting to price in earnings. They're clearly nervous about them. You can see how high vol got last earnings. It got into the 30s, and now it's sitting at 32, and we're still a month away. So there is definitely some. I think this next earnings round is going to be pretty important. Now it's still early, but they're pricing at a bigger move than normal for IBM. Normally, they're pricing at about 4.2. Currently, they're pricing at about 7. So this next earnings is important, extremely important. More on the projection side than the straight earnings. And that is, so just be aware that IBM prior to the 24th is going to be one thing. And then post 24th, this is going to be entirely driven by earnings. And that's what I have. Leisha, what do you have on the charts?
Let me show you. Currently, we have some support that it's tested several times here. right around 189. This looks like it could have been a little of, off this downtrend, a little bit of an inverted hammer, and it tried to rally from there. But make sure you have these moving averages in there. That 21-day held it down. So you have a battle between the 21-day and the 189 support, which is also a nice volume note there. And then right below there's the 50-day at 187.32. So we might get a little consolidation here as it struggles with all those support and resistance levels right there. On the pitchfork, this support level comes in right. Well, these little lows line up with that line I just showed you on there, 189-ish. Below there, 187 as support. Now, if it pops up, we'll have 193 as resistance, and then it'll come up here and retest that previous high at 198.70. I think you're going to get a little consolidation here.
Consolidation trade.
On to you, Andrew.
Well,
deal with it. Deal with the
All
consolidation, Andrew. Show us how to do that.
Well, the hardest thing now, well, let's just take a look at some vols. Some volatility.
Yes, here's Andrew with the volatility view of IBM, not JPM.
JPM, we had calls from last week that paid okay, depending on what you did, how you got into them. But today, Alicia was talking about a little consolidation. Let's look kind of from a vol, like a little vol perspective. And I think mostly the story is kind of around the earnings cycle, since that's where we kind of find ourselves stuck around there, where volatility post, that is what I would call holding the earnings cycle. So usually when you're looking at how to price different terms, you're looking at the term that expires just after a date is what I would say holds the vol for the date. So the April 19th cycle, the volatility here is only 1959. So between the two dates, you have nothing happening, or the market is not perceiving much to happen. And then you have something happening post. Now, that's why the volatility here is, 60, 70% higher than the volatility here. So when you go at it, so if we're looking at the 190 calls here, the April 19 190 calls at $3.60. You go 1 week after that, and they pop to $7. You're like, whoa, that's kind of a jump. But now if you go here and you look at, okay, I've got the April 95s here are 95 cents. The week following here is, let's see, April 95s, the 95 calls here are 160, and the 95 calls for the next week here are 90 cents. So now you have a calendar that's only costing around 70 cents. So how I would look at this kind of trade is just sort of, Alicia's saying she's looking for consolidation. Consolidation to me means you're not expecting a ton of action. And if I'm not expecting a ton of action on already a low volatility, I would move to some kind of calendar spread. Another thing too is a 19 volatility here is very, very low for IBM. Take a look at how inexpensive the vol is here. So if I look in the last, say, 6 months, and what I'm going to do here is I'm going to just run a 30-day volatility. So I don't know how many of you caught the volatility presentation we did on Thursday in the trading desk, and we put it to our YouTube channel. So if you're interested, go to the YouTube channel. It's free. And you could see the Viking of volatility wearing his Viking hat. Actually, I didn't wear a Viking hat. Okay. So you have this 30-day volatility is grabbing this big gap here. You've got a couple of gaps that IBM has, which is giving you an idea of the last 30 days, the average volatility is 22. Oh, Wesley, you watched it 3 times this weekend? Thank you, William. Thank you. Thank you, Leslie. Thank you, William. Nice to hear. I need a hat. So now I'm going to do is the average volatility for the last 90 days to kind of smooth things out a little bit, which this is still holding this pretty big gap here in IBM. So the average volatility with this, what I would say earnings gap of about what? 15. Wow. That was pretty big, like $20. Anyone have a link? So Hannah, if you just go to our YouTube, Option Pit, our YouTube channel, it'll be there. It's also in our daily, when we send out our OP Live every day, an email, like telling you what we're doing for the day. I believe the link is in there. So the long story short is you've got volatility that's essentially averaging around a 23%. This is a huge gap. The way I look at this, right, if you saw the presentation, IBM easily is running, around 1% a day on average here over the last 20 days is a 22% volatility. The last 10 days is a 13. So as Leisha indicated, you do have a consolidation of the stock price. It's just not doing very much anymore. So when I have that kind of a trade pattern, I want to look for something basically that has some kind of positive theta, positive to gaze. So I would lean here toward a calendar spread. Okay. So the idea is you want to trade a calendar spread here. So now the idea being, which one? So I would look at this like this week, we have kind of like we got some activity with the Fed, things like that. I think actually we could just do a weekly calendar right around, I'm going to say like 195, even 192.5. The 92.5 calendar is only going to cost me 140, less like about 80 cents. And just watch IBM kind of go like flipping around a little bit. That's how I would look at that particular trade. And that would be the trade. I don't know if Mark and Lisa are going to come back, but that's kind of what I'm thinking about from a trade point of view.
I think that's a nice trade, Andrew.
So, you don't expect the stock to do much.
No.
And the vol's pretty low. The market's been looking okay, although today it's selling off a little bit. But whoa, what is somebody doing back there?
Yeah, if you were looking for like an alternate trade, something simple and easy, you could sell the 82.5 put spread at like 50 cents. Just a simple put spread. In regular April. Bless you, whoever that was.
Scott.
Bless you, Scott.
Dang, he's loud.
I'm a loud sneezer myself.
All right, hold on.
So yeah, just simple trade. You can sell the April 185 put. Yeah. So, anywho, there's your simple trade. Andrew's giving you something to think about with Vol as well with his trade. And
sorry, I got lost there for a second.
And yeah. All right, everybody. Simple, easy. This is the way the ticker highlight show should be. I hope
hold
you
on
guys
for a minute. I got it. We got to produce this idea here, there, Mark. You're
produce your idea.
Well, do you want to get it out or are you just going to disappear before I can write it down?
No. I want to get out. I thought you'd already put it out.
No, my screen went blank.
Ah.
So I'm rebooting here. I'm doing my thing.
All right. Excellent. Doing your thing.
Yeah, I'm getting there. I'm getting there.
Yeah. In the meantime, like I said, that put spread looks pretty reasonable. It's got about 3 weeks, and it's $4 out of the money, and you're collecting 50 cents on IBM. That's not bad. IBM hasn't been below 185. It briefly touched below 185 on February 21st, and has basically not looked back since. So, and you've got the 50-day at support, which is 186.37. That'll stop IBM as well.
Mark's idea is to sell a. So you're selling one. What is it? IBM.
April 19th.
April 19.
185, 182.5 put spread at better than 50 cents.
Okay.
Super easy.
Better.
Super simple.
And I was looking at buying one IBM April 19, April 12. My very complex calendar spread, 92.5. April 12, April 19, April 12, April 19. And then I'll cover some of the trades that we have open, some of them that expired away. And where we're going with that. And what did I say those calendars were? Let me look. All right. So our calendar is, so the April 12, the 192.5. So I'm going to say 155 over 235. So that's 45, 80 cents, 80 cents for the calendar. So
that's not bad.
You're kind of just seeing, for 80 cents or better. I'm going to put in a bid for 75 and see what happens.
All right.
Oh, I'm not showing my screen, of course, because. And now.
Why would you need to?
Yeah, I'm working on it. Well, people like to see so this is a put vertical spread, and this is a call calendar spread.
Mm-hmm.
Okay.
If you're really bullish, you could do both, and that's going to be an aggressive. That'll put you in a.
Well, that would put you in close to a credit situation or low cost.
Yeah.
SH has a question for you there, Mark, on 0 DTE.
SH.
Yeah, so if you look in the chat window.
Yeah, shoot Ted an email, support@optionpit.com, SH, or call 888-872-3301. We had a great March. If you did all the trades, you were definitely happy. Front end of March was not great. The back end of March was absolutely incredible. Alicia, how much did your last trade make on 0 DT? Like 500 something?
Yeah. Mark's idea is right.
I'm sorry, I gotta look. It was 600.
Mark's idea was a credit spread.
623%.
623%. Not a bad little trade there.
Remember, the key to that strategy is allocating. You don't go all in on every trade. You got to allocate.
That's very low.
You got to allocate. Allocate your dollars.
I'm feeling pretty good.
So hopefully this is.
It was. She's got it in. Yes, It was. Wow. It was definitely 628%.
628%. I think that's better than any of the ones I've had.
Hold on.
She's changed our trading record, so I can't read it.
All right. So the risk of your put credit spread is that you're selling this for 50 cents and you could lose up to $2. I would say if you sell this for 50 cents and the credit gets to $1, I would just kill it. In this particular spread here, if if the stock goes down, what I do is I close the short call and I buy a put. So maybe like a 185 put or something like that in IBM. But usually with the call calendar, I wait till the short call goes to 0. And I would close that and replace the delta with a put if the stock is going down. So that's how I would manage that. If you have the put credit spread, I don't like having this. I don't like losing more than the credit I can put in. So that's the risk. So you have to, again, you have to manage it how you see fit, but that's what I would do. Just, or you're going to roll that into earnings, which you might not want to do. I just think we're going to float around here, and this thing is probably worth $1.50 or more by the time. Because I think, again, going into earnings, people are going to be a little more giddy, but doesn't mean we can't have a little sell-off in the meantime. Also, if you go to our homepage and you go to free newsletters, report. Where are we? My computer is just really slow.
Well, real quick, then I'll answer Mark. What I had made was $251 on a $40
trade
risk.
That's not so terrible.
If you had ridden it into the close, you might have made a lot more, but we took half off, and it was a good trade.
It was a great trade. So there you have it.
All right. Now I am looking at the pit report log. So if any of you are interested in these trades, we post this log every week, I believe on Saturday.
Yes.
JPM, I filled at 161. I gave myself a stop out. I think I sold them at like 185. GE, I'm still writing the 180 call calendar against these SMR calls. These things got smoked when SMR went down. But I'm looking for this call calendar to start to pay me. It did trade 180, and I did roll it up once. The description is here. NVIDIA, I lost about 94 cents per spread, $94. I did sell out the call spreads. I rolled the call spread. I sold them both for money, but it wasn't quite enough to pay for the put. And let's see here. Amazon, I'm still riding a April 19, 185 call, and my all-in cost on that is like $4. It's trading 2. Okay. So I need a little help on that trade for what we've got. Clay is asking, what about the put spread for the 11th for 28 cents? I mean, you can do whatever put spread you want, Clay.
The issue you have there.
277, that's nice.
Yeah, you can totally do that if you want.
So I would just, look and see if you can get a decent entry price on the put spread today. Look at that. William says you're a moneymaker, Leisha.
And she is. All right, everybody.
Thank you, William.
All right,
everybody. I got to leave for the trading desk. You guys have a good day.
Yes. Everybody,
and I will do a little more updating on this sheet today.
And
I did make money on your GE spread. Remember when I said you always do spreads, and you said, well, I make money.
He's not wrong. All right, everybody.
All right, everybody, have a good day. I got to run to the trading desk.
Here. Thank you for listening in. We'll be back
next week.
Make sure you check out our next post about our next stock this Thursday. So for the Viking of Volatility and Leisha J. Leslie, Queen of the Candles, I'm Mark Sebastian, your only option. Have a good one.